federal government's currently reviewing the upper limit for the term deposit guarantee put in place during the global financial crisis and made permanent at the end of last year. Now, as part of the review, it'll have to take into consideration the impact of the floods and how funding that guarantee may have to change. Let's get more with Bill Keogh, Managing Director of Money Markets at FIIG Securities. Bill, welcome into the show. How does sort of the natural disaster element on everything suddenly change the rules of the game?
Yes, Carson. Well, as you rightly mentioned just before the intro, that the government has looked at the guarantee for deposit holders, which is presently stands at $1 million per ADI per depositor. And certainly, I think that the impacts of the floods will have an impact on some of the credit unions and building societies, and I think this is a perfect time for the government to continue the support of the banking competition outside the bigger banks and the major banks.
So, is that limit of $1 million per ADI per depositor, is that likely to then be lowered? And if so, how will that change, I suppose, our budgetary considerations?
Yeah, sure, and that's a big question. That's what the market is waiting for. The $1 million threshold is certainly larger than some of the other countries we saw at the height of the GFC. But I think what's certainly the government reform package, the competition reform package within the Australian banking industry, I think that they have to consider probably a higher level and maybe not even change the $1 million threshold, because they want to maintain support with the smaller ADIs, the building societies and the credit unions.
And yet it does just underscore, does it not, Bill, how beholden those smaller institutions are to term deposits to fund their lending book, and perhaps that whole model of it in itself has to be reviewed in this environment where even the big four are going head to head in that quest.
Yeah, well, look, if you look at the APRA statistics that were put out at the end of last year, certainly the building societies and credit unions, for their asset liabilities, their funding is up to between 80 and 85%. They rely on deposits being either at call or term deposits. So the government rightly understands that this is a very important part of the smaller ADI's funding books, and therefore that look, I think the banks, the major banks, they're fine. I mean, during the height of the GFC, obviously this government guarantee was brought in for the whole ADI sector, not just the smaller ones, but certainly that some of the difficulties that may eventuate from the floods, and we have to remember that these the building societies and credit unions a lot of these are member based and have a lot of do support the local communities, and vice versa. They put profits back into the community. They supply services such as lending to small businesses that may come under a little bit of stress in the foreseeable future, mortgages to the normal retail sector, and also they supply the likes of rates for term deposits. So all those factors contribute to the government supporting the banking sector.
Yeah, just a brief final thought on Basel III as well, and implementation, because the big bank chiefs have been criticised of late for their hard line against this idea that there would need to be potentially a 30-day provisioning if anything was to fundamentally go wrong in the world of finance, rather than currently the existing 5, 6, 7 day provisioning that's made by these banks. What would the ADI's response be on that one?
Look, Carson, that is still under negotiation, and the banks, and especially the major banks, are moving towards Basel III, which doesn't need to be implemented to 2013. So it's really APRA is asking the banks to come back to them with their feedback of how they're going to maintain their liquidity ratios, what's going to be considered in the security world as high quality liquid assets. So all that is still under negotiation. negotiation, and it's still a little bit grey. And I'm sure there'll be a lot of conversation about that, especially up until the government guarantee is expected to expire in October this year.
All right, as you say, a bit of time for further negotiation. We'll be watching with interest. Bill, thanks as always. Nice to check in.
Okay, thank you, Carson.
Bill Keogh there from FIIG.